My next guest was the #1 fund manager in the UK for decades. His performance has been over 12% per year for the last 30 years.
In the UK, tall poppy syndrome. The media like to build people up that when they're going through a difficult time, whatever it is, whether they're footballers, whether they're fund managers, the media goes for them. And the media went for us, and went for me particularly.
You've got this fund, loads of money in it, start to perform poorly because you've been super successful in the past, press are all over you, saying he's lost it, he's shit all of a sudden. The general public then starts to be concerned, says, right, we'll take our money out of that and find somewhere else to put it. And so those outflows started to accelerate. And then what happened then?
No media were interested in running a story about what was really happening, what the strategy was, why I was invested in the way that I was. And that meant it was very hard to counter the story.
He grew the biggest funds under management in the United Kingdom, working for Invesco and then setting up on his own. And then it all came crashing down.
There were some very lonely, very dark moments. And of course, it had massive impact on my family, on me, my mental health. As you can imagine, it was horrendous.
Hi everyone and welcome to today's episode. This is a world first. There's always two sides to a story. And the one that you might have seen on TV, you'll find out today, may not be the truth. I can't tell you how important this episode is because we need the truth. And the mainstream media over and over and over demonizes people without seeking the facts. Well, today we're going to get the facts. Please welcome the most successful fund manager in UK history, Neil Woodford. This episode is proudly sponsored by Allsop & Allsop Mortgage Brokers, the leaders in Dubai real estate. Whether you're a first-time buyer, a seasoned investor, or looking to refinance, Allsop & Allsop's dedicated mortgage team will expertly guide you every step of the way, ensuring a seamless and stress-free journey. Now, with over 16 years of experience, they offer exclusive access to the UAE's best rates, personalized advice, and tailored financing solutions that perfectly suit your needs, leaving you free to focus on finding your dream home. And that's what we want. Experience the difference with Allsop & Allsop, your trusted partner in securing the perfect mortgage solution. Neil, welcome to the show.
Thank you, Spencer.
Okay, so you were like the kind of the what would I call it? The Mick Jagger, the kind of like the rock star of fund managers. You were the guy out there that for many years was regarded as the man when it came to fund management. You know, your name was synonymous with success in investing. Your name was synonymous with the kind of person that you'd want to listen to when it came to getting valuable thoughts, information, and opinions. So you're like, and I know for lots of people that are watching and listening to this right now that don't know you from Adam, they're like, how could there be a rock star of fund management? That doesn't even make sense. It sounds like such a boring industry, yeah? But you literally were the almost, along with probably 2 or 3 other people, the faces of fund management in the UK for many years.
Yeah, I was. I didn't wear that particularly well, I don't think. I never really considered myself to be a rock star. I mean, obviously, I attracted quite a lot of attention, and from time to time, there were media pieces about me. But I'm not. I didn't ever really enjoy that part of the job. I found it quite uncomfortable, frankly. I just enjoyed being a fund manager.
It's a byproduct of success, though, isn't it?
Yeah, you naturally get dragged into that, and you know the role, because I was a retail fund manager principally. I did run institutional money, but mostly my reputation was built on with retail funds. So I had lots of investors. People talked about as I became more successful and as the funds grew in size. People followed me, and there was a lot of demand. There were demands on my time, from people who said, well, I need to talk to you and find out what you think about X, Y, and Z. And I used to find that quite difficult. It was a bit of a distraction, but, I went along with it.
You did really well. So did you have some magic formula, or were other fund managers just useless? And I know you don't want to say anything negative about somebody else. I can respect that. But your performance was exceptional for many, many years.
It was
consistently exceptional, like consistently. Where look, I'm from financial services. I got into the industry in 1993, so I literally had to allocate money into people's funds. Okay, whether it be a low, medium, and high, a balance this, a blooming, let's have a bit of China, let's have a bit of UK small cap, whatever it may be. I had this, and so I knew your work. And you were consistently outperforming most people in your segment years and years and years. So what were the others doing that was so bad? Or were you doing something really different?
I think I was doing something different. And partly that was because I sought out jobs and an environment in which I could express what I think are the key ingredients of a fund management approach. So I think the industry historically constrained fund managers. I think it is through a lack of constraints that you can deliver consistently good investment performance. So if you look, I mean, I don't really, I mean, I can talk about myself, but in a way, perhaps the most famous sort of unconventional manager is Warren Buffett. I mean, the idea of Warren Buffett delivering that sort of investment performance over the 30 or 40 years he's delivered it, or even longer. He's well into his 90s now. But by matching the S&P 500, I mean, he's ridiculous. He's taken a very specific, narrow, what some people would consider to be a very narrow approach. He's taken big stakes in big companies and held them for very long periods of time. And that's broadly the approach that I followed.
Well, we can come on to investing a little bit later, because I know that he's sitting on a huge amount of cash right now.
He is, yeah.
And I love the way that Charlie Munger says that EBITDA is bullshit, which I find really interesting. But that's for another part of the conversation, because I think understanding what you can teach us with your years of experience about how we invest our money, I think is really valuable.
Mm-hmm.
But I want to get onto the story. You at your peak were managing £33 billion of assets under management.
Mm-hmm.
So let's give people some context. Who else in the UK in retail had been managing that amount of money before?
Nobody.
So you were the highest ever.
I think so, yeah.
Okay, so that's some context for everybody here. 33 billion is a huge amount of money with a huge amount of responsibility.
Yep.
That's an element of investable cash plus growth. I'm obviously very sure. Your average return since you were doing this professionally has been something in the region of 12% a year.
Mm-hmm.
Is that correct?
Something like that, yeah. Yeah.
If anybody that's watching this right now, okay, apart from my crypto punk friends, okay, could get 12% a year for how many years?
Best part of 30 years.
Best part of 30 years. If you'd have said to me, you'll have some ups and downs, okay, it won't always be sunshine and rainbows, but over the next 30 years, you'll average out 12% a year. Okay. I know, being from the investment world, I'd have ripped your arm off for that type of result.
Yeah.
So that's stellar performance. One of the largest amounts of money managed by any fund manager ever in the UK. So what went wrong?
Well, it's a big question. I was running that money when I was at Invesco. I left Invesco and helped set up my own business, Woodford Investment Management. And initially, we had a lot of success. We built a fund management business very quickly. We peaked out at around 17 billion, from nothing to about 17 billion pounds under management pretty quickly. And I delivered 3 years of index beating performance. I then went through a difficult period of performance, which I'd been through on numerous occasions in the past as a fund manager. One thing I should tell you about the career of a fund manager, and it's absolutely the case for Warren Buffett. He's been through long periods of underperformance when he's been, many people say, oh, he's lost it. His approach is fundamentally flawed. And people said that about me on numerous occasions through my career. And you have to embrace, one of the really tough things about active fund management is that you know that you're going to go through a difficult period. You know that there are going to be periods, sometimes 1 year, 2 year, maybe even longer, when your strategy, your approach is not going to be working in the stock market. And during that period of time, you've got to go through a period of underperformance. And that's hard. It's very hard. Now, that's what I went through at Woodford. We after 3 good years, we went through a difficult period, and that's broadly because my strategy, my valuation-driven strategy, which had been the approach that I had always worked with. I can talk later about what that approach means, but it's a valuation-driven approach with long holding periods, a patient investment approach. That was not working in the UK market at the time. And principally, that was because I was backing the domestic economy. I was backing domestically exposed stocks in the market. That was where I saw most value. And at the time, the UK economy was perceived to be embracing a very difficult sort of future because of the whole Brexit debate at the time. And there was the political backdrop in the UK was incredibly difficult as well. Theresa May had called an early election. The election result was very close between a Jeremy Corbyn-led Labour government and Theresa May's Tory, a Jeremy Corbyn-led Labour Party and a government without an overall majority or very narrow majority with Theresa May. Now, that created a very unbalanced political situation. It was proving impossible to deliver the Brexit outcome that the country had voted for in 2016, and there was this sort of political paralysis going on in the UK, and that had a big impact on perceptions of the UK economy and the UK stock market. That was the principal reason that my funds were underperforming at the time.
So you've got underperformers.
Yes.
You've not broken any new ground there. This has happened a million times before. You're not the first, and you won't be the last. So, okay, we're not performing so well. I've invested in funds that have done 50% 1 year and down 50% the next year. So that's what's unusual about that.
Yeah. Well, it wasn't that unusual, actually. It wasn't that unusual. I've been through worse periods of performance in my career.
So the fun part
before. But the circumstances were different, and what made the situation different, I suppose, are some things that sort of we now look back on, and as you know, when I look back at that period, the first, I suppose, the thing that I, in setting up the new business, what we had not anticipated is ever bumping into the sort of circumstances that we found ourselves in that 2-year period between really sort of 2017 and 2019, and what we didn't have was the control over the business that we thought we did, frankly. And that was something I sort of regret, obviously, now. Many fund managers have been through worse periods than that. But anyway, that period of underperformance created a lot of media attention. Because I was underperforming, because the strategy wasn't working, and because of who I was, that attracted a lot of media attention. And as you know, in the UK, tall poppy syndrome, the media like to build people up, but when they're going through a difficult time, whatever it is, whether they're footballers, whether they're fund managers, the media goes for them. And the media went for us, and went for me particularly. And
basically said, what, you're shit.
Yeah.
Basically,
Woodford's lost it.
Yeah.
His strategy's not working. He's had, like, worst if a mandate drift. He's investing in things he doesn't really understand or he doesn't know. I mean, apparently they had no idea what I knew and what I didn't know. But anyway, there were lots and lots of accusations.
They were making stuff up.
Yeah, they were making a lot of stuff up. But it created a lot of noise. I mean, I was attracting a huge amount of attention in the financial media at the time. And the funds shrank in size. So
how much was in the fund when this
started out? A peak about £10 billion in that fund.
10 billion in there. Okay, and then you started to underperform, and there were obviously some people that were taking their money out.
Yeah, we had huge outflow.
That was very normal if funds go down in value, that people take money out. But the outflow was greater because of the press.
Yes, it was.
Okay, so this press, and then so people started to panic.
Well, it wasn't that. Panic's a pretty strong. I don't think people got panicking, but I think people were worried. Yeah, and of course, in the UK, in the retail fund management market, I think the media has a very influential voice.
Mm-hmm.
So I think people were reacting to what they were reading, and particularly those investors who come into the funds that didn't have an IFA advising them. And of course, there are loads of platforms where there is no advice. People had bought into the fund from those platforms without really knowing what they were buying, I think, to some extent. Anyway, those sorts of investors were probably more susceptible to the sort of media onslaught. And so a lot of money came out of the fund. We had huge redemption outflow. And in fact,
Even though that voice from the media was not, the information wasn't true.
Yeah.
Okay, so I was described in the media, okay, as a pint-sized ladies' man. I was also described in the media as an investment banker, of which I'm neither. Okay, maybe I was a ladies' man, but I'll argue if I'm pint-sized. I was more offended about that. The media, they don't care about the truth. Why let the truth get in the way of a good story? So was what was coming out in the media at the time, was it fabrication? Was it embellishment? Were they dramatizing the fact that you're a fund manager that was just going through a run of poor performance?
A lot of that, yes, all of the above, I would say. So yeah, there was. We used to laugh sometimes. I mean, the stories were just so ludicrous and so far removed from the facts that it was comical at times.
Okay, so let's just analyze this for a second in simple terms. You've got this fund, loads of money in it, start to perform poorly because you've been super successful in the past. The press are all over you saying he's lost it, he's shit all of a sudden. The general public then starts to be concerned, says, right, we'll take our money out of that and find somewhere else to put it. And so those outflows started to accelerate because of the press and media information. And then what happened then? So you got this money coming out. What was that making you think? What were you feeling? Were you in that moment? Were you worried or angry? Just give me a bit of a sense.
Yeah, it was a very frustrating time. It was very difficult. Being under the microscope like that is not a comfortable place to be. And the business to some extent, maybe didn't help itself because we were very transparent. When we set Woodford up, we set out to be very transparent. So, for example, we were the only business in the industry that had full portfolio disclosure. So once a month, we gave our investors full portfolio. We told everybody, this is what we're investing. This is what we're doing with your money. We're invested like this. Now, of course, I think that's what investors are entitled to know. You're looking after their money. You have an obligation to tell them what you're investing in. But I think now it was a mistake because we were the only one doing it. And as a result of that transparency, the media obviously we were the gift that kept on giving for the media, because every time a company announced disappointing profits or had a statement that wasn't sort of didn't meet expectations, of course, the media, Woodford's got that one. Right, okay. Here's a story. Woodford, big investor in XYZ company, share price down 10%, disaster. And we fed that sort of media narrative. And I think
you gave them the ammunition.
Yeah, we gave them the ammunition, and they used it, and to good effect. So the outflow was huge. I mean, the fund went from 10 billion to 3.2 billion in a 2-year period. That wasn't performance. That was outflow and performance. So it was very challenging, and it was very frustrating because so much of what was being said was just ludicrous and not true. But of course, it's very hard to counter that narrative. You can't hold up your hands. No, you're wrong. We found it virtually impossible. We did try, but we found it virtually impossible to put forward an alternative narrative. No media were interested in running a story about what was really happening, what the strategy was, why I was invested in the way that I was, and that meant it was very hard to counter the story. Now, what I did make sure I did was to make sure that we communicated very repeatedly and regularly with investors. We made it very clear to our investors what we were doing. And I believed in this. I still now believe it. Well, I did at the time and believe it was the right investment strategy that we pursued at the time.
Okay, so up until this point, as I'm understanding it, we've got you've done really well, super successful, set up on your own, lots of money's come your way because of your track record of success.
Yep.
And then you go through a bad patch. The press are all over you because they're like, right, let's get this guy. Okay.
Mm-hmm.
It's almost like you're the Wayne Rooney of fund management, aren't you? They're going to go for you because. All right. And then some money comes out of your fund. So you have outflows in your fund. So quite a lot of money comes out, but the fund's still going.
Yeah.
Okay. You're still working every day,
Yeah.
trying to get back to positive results.
Mm-hmm.
There's nothing else apart from good intention and focus on trying to get for your investors that are still in there. But the ones that have left, they've taken their money and they've gone somewhere else, and they're free to do so.
Mm-hmm.
And the ones that are in there, the 3 billion that was left,
Mm-hmm.
okay, which is still a considerable amount of money by anyone's book. I don't know how many funds are out there running £3 billion at the moment, but there aren't that many. Yeah, it's a lot of money. 3 billion in there, so you're still working every day. Yeah, you've got shit from the press. They're beating you up every day. But okay, then what happened?
Well, I mentioned earlier on what I didn't realize, naively maybe, what I didn't realize is how little control we had over the destiny of the business in that difficult moment.
Who owned the business?
Well, we were the appointed fund manager, but the fund was an LF, Woodford Equity Income Fund. LF stands for Link Funds. It was Link's fund. We were the appointed fund manager, but it was Link's fund. Link was our authorized corporate director, but basically it was their fund. The regulatory structure is that it was their fund. They appointed us as fund manager, and
you shared in the benefits.
We paid them to effectively.
Did you do that and set that business up that way because it was faster, easier, and less hassle?
We set the business up that way because we had to. We had to appoint Link as our ACD. Yeah, we didn't have to have that structure, but we couldn't have set the business up, running the business in a different way because it would.
So you had partners that were able to bring something to the table that you weren't able to bring, and working with them together just meant it would be a really smart way for you to run fund management.
To be completely clear, yeah. I mean, there's an alternative, which is to be your own authorized corporate director.
Yes,
but that requires a huge upfront cost, which you have.
What roughly is that cost?
I couldn't give you a figure, but
millions?
It would have been millions. Yeah, it'd be millions to set that infrastructure up. We didn't have that money to do that, so we outsourced.
Mm-hmm.
We didn't want to outsource to Link. We wanted to outsource to a different provider, but we were effectively forced by the regulator to appoint Link.
Okay, so their advice was appoint Link to do the job. That's who we.
Well, their advice was you won't get regulated unless you appoint Link. The rationale being Link were the largest ACD in the country, one of the largest, effectively the largest ACD in the country. I think the regulator was concerned that our fund was going to be a big fund, and they wanted a big authorized corporate director.
There's more.
There was a choice. We in fact chose somebody else, but we weren't able to appoint them.
So the regulator, when you chose somebody else, said, no, you're not having that. You're going to these guys.
They didn't quite put it in those terms, but they said, if you don't appoint Link, you won't get regulated.
Okay. We need to talk about regulators for a second there. What do you mean? They said if you don't do it, you won't get regulated.
I think that's
no regulator out there says you can only use this one company to help with your business. Surely a regulator would say, we can't recommend anyone, but these are the companies that are...
But the truth is that they made it very clear we would not get regulated, so we appointed Link.
No, I'm not going to stress that for too much longer, but sounds like nonsense to me. Right, but anyway, so you go with this organisation, you get yourself set up because you want to be set up quickly and efficiently. The regulator have said to you, this is the way you're going to do it, guys. And you're like, okay, fair enough. Okay. We want to run money. We don't understand that world. We understand this world. We want to run money. We know how to do that. Let's go.
Yeah.
Roughly.
That was pretty much, And we set up, anybody who set up their own business knows that, it's a hard journey. We were very lucky. We were profitable pretty much from the early days. And the reason we were profitable, we were able to grow the business and employ talented people and pay their salaries, was because we had that sort of low cost infrastructure. So it was by definition the sort of, lots of entrepreneurs. I consider myself to be an entrepreneur, really, as well as being a fund manager. We set up our own business, and we were very successful in doing that. But it was hard, and of course, like all entrepreneurs, when you're trying to set up business, you want to keep your costs down.
Yeah.
You want to get to revenue and profitability as quickly as you can. That is exactly what drove that decision making about, right, we'll have an outsourced ACD. We've got to appoint Link. Okay, we don't really want to. We don't want to at all, in fact, but we'll have to appoint Link. But we get going, and we're running the business, and from there on, we have 3 years of great success, and then it's a more challenging environment.
So was it? But if I was a retail investor going into the fund, it wasn't expensive for me to be in.
We had the lowest fees in the industry.
What were they?
I can't remember exactly what the fee structure was, but I think we set out to have the lowest fee structure in the retail fund management.
So I've got this superstar fund manager, okay, plus with an incredible track record, okay, plus I've got low cost entry and low cost management.
Yep.
Okay, but sign me up, as a retail investor, sign me up.
We deliberately set out to be. We didn't set out to be disruptive for the sake of disruption, but we set out to do things properly. The whole point about setting out Woodford was to do things the way that we felt they should be done. And we weren't able to influence those things when we were working. We were wage slaves. We were working for another big organization. But we did have that ability once we set the business up. We could set the fee structure. We decided to be transparent. We did other things. We got rid of bonuses. We paid people very well for the job that they did, but we felt that my observation is that in fund management, in active fund management, bonuses can distort fund manager behavior, and we didn't want that. We wanted to have a very sort of pure structure of business. Anyway, so
we've now got these money coming out.
Mm-hmm.
You're down to 3 billion or whatever it is. You're still getting kicked every chance, whether it's the FT, the Economist, or whatever it is. The press are out there, okay. And they're just hoping and praying that they can find some more drama because it sells them newspapers. Okay, what happens then?
Well, it was in the early summer of 2019. We'd had a lot of outflow. We had some institutional investors in the fund, one of which was Kent County Council. And in response to the media hysteria at the time, Kent County Council decided reluctantly, I spoke to the guy who was part of the decision, reluctantly, because I'd been managing money for them and they'd been a good client and I delivered great outcomes to them for a very long period of time. They decided it was just too hot in the kitchen. They had to get out. So they decided to redeem their investment in the fund. It was a significant investment, 200 odd million plus. And when that redemption request came in, I think Link panicked and made the wrong decision. And they suspended the fund. Now, they didn't tell us they were going to suspend the fund. They didn't tell us what the criteria would be for a fund suspension decision. I found out about the decision to suspend the fund on the morning it happened.
From who?
From my colleagues in the business who'd been told by Link literally minutes before it happened.
And what were they told?
We're going to suspend the fund. That was it. The decision had been taken over the weekend. This was on a Monday the 6th of June, I think. And we were told that Link had taken that decision over the weekend without consultation with us, and the fund was going to be suspended.
So what did you do?
Well, it was a shock. But we then thought, well, let's try and use this fund suspension. Fund suspension, by the way, means that essentially people can't take their money out or people can't put money in. Basically, the fund is sort of frozen. It's designed by the regulator to be a sort of legitimate mechanism that can enable funds to sort of adjust to a period of difficulty, a crisis, whatever you call it. But it's designed to sort of buy time for a fund to if you like, react to and respond to the stress that it's been exposed to, take corrective action if it needs to, and then at a future date, it's not predetermined, but typically, we were told 6 months for a fund suspension. So we were told you got 6 months in which to restructure the fund to create a sort of more liquid fund, and then the fund door will be open, trading will start in the fund again, and you'll be off again. That was the story at the start of the fund suspension period.
Okay, if someone's going to tell me that kind of bad news, my instant reaction would be to go to whoever's in charge of making that decision. I want to have a face-to-face with them and find out what they're doing.
Yeah.
Did that happen?
Well, most people thought that the fund suspension decision was my responsibility. I'd taken the decision. We got blamed for the fund suspension decision. And what that unfortunately led to was an enormous tidal wave of more media attention, focused on, for example, the investors couldn't get their money out. Neil Woodford's done this to them. And of course, it was deliberately presented as that. It created a huge amount of noise in the financial services industry. The Treasury Select Committee were jumping up and down. The Treasury Select Committee was speaking to the regulator. The regulator was talking to the media. It created a shitstorm, basically. And I was at the center of it. It was like, Neil Woodford has done this, Neil Woodford has done that. The reality was that I had no part. I took no part in that decision to suspend the fund.
Mm-hmm.
It was done to us by Link.
Give me the timeline. What month did it happen?
June the 6th.
Okay.
2019.
June the 6th of 2019, Link suspend the fund.
Mm-hmm.
You now get, no one can put money in, no one can take money out, moving forward.
Yeah.
And over the course of the next few weeks and months, the press attention just blows up beyond belief.
Gigantic, yeah. I mean, okay. I literally can't move without people taking pictures of me, or there were media at my home. I was doorstepped by Panorama. When I arrived at the office later in the year, it was an incredibly unpleasant time for everybody in the business, but for me particularly, because it was Woodford Investment Manager. I'm Neil Woodford. The shitstorm was focused on me, really.
And at this time, do you know it's ending, or do you know at this time you're in your brain? You're like, right, we've got 6 months. Right, we've got to do what we've got to do over the next 6 months. And so you're still in that kind of like work management.
Oh God, yeah.
Dealing with negative nonsense that's driving you mad, I'm sure. But you're also still doing your day job every day.
Absolutely. I mean, so let me tell you what we did initially. So first of all, within a few days, Link gave us instructions. This is what we want you to do. It's our fund. We can make the decision. We're in charge here.
What were they?
Basically, they said you've got to. Well, initially their instructions were ludicrous. I mean, they were basically instructing me to do something that wasn't appropriate from a regulatory point of view.
What were they asking you to do?
Basically, to turn the fund into 2/3 cash.
Okay.
Which you're not allowed to do. It breaches the rules. Anyway, with some toing and froing, we argued against what they were recommending. But basically, they said, you've got to transform the liquidity profile of the fund. You've got to, I won't bore you with the detail, but basically they said, we want you to take the fund from where it is now and turn it into a fund that looks like this. And what they wanted was effectively, the fund was divided up into sort of buckets, and the buckets were 1 to 4. There are 4 buckets, and stocks are allocated to different buckets. It's arcane, but anyway, allocate based on how quickly you can liquidate each position. And they basically said, we want to have at least 2 billion of the fund in positions that you can liquidate in a day. And
so to give people some context of that, okay, and I want to try people to understand this. So if right now you own a stock, let's say you own a Tesla stock.
Yeah.
And you've got $1,000 worth. If you want to sell your Tesla stock today, you can do it right now, no problem at all. If you own $100 million worth of Tesla stock.
Mm-hmm.
Imagine what would happen if you now put those stock onto the market to sell. Okay, what would happen to the value, or sorry, the price of the Tesla stock on the back of you trying to dump $100 million worth? Obviously, it's going to have a potential impact on the price of that stock. So you are running a fund with these billions of pounds inside them, having holdings. I'm sure there's stuff you can't just sell.
There were positions in the portfolio that based on modeling, because it's all about predicting how quickly you could exit a position.
Yeah.
But the fund's liquidity was assessed basically on how quickly you can sell all of a holding. How long will it take based on how many shares are traded in that stock on average over the last year every day? We can predict that if that liquidity profile continues in the future, that trading pattern but it continues in the future, it will take me roughly this amount of time to liquidate the entire position. And that determined which bucket it was in, and that gave you an idea of what the liquidity framework of the portfolio looked like. That framework, our liquidity was measured by Link on a framework, using a framework that they applied to all of their ACD clients.
Was there one person at Link that you dealt with?
No, we had dealt with umpteen. I mean, I didn't. I was a fund manager, but we had people in the organisation within Woodford who dealt with Link literally every day. Okay.
But there was someone pulling the strings in there.
Within Link or within?
Yeah.
They were. The board of Link were all involved in the decision making.
So they want you to go 2/3 into cash in this.
Pretty much. They argued initially to go into this gigantic cash position. We said, well, that's apart from anything else, that's not allowed. But our investors, I knew my investors pretty well. I'll talk about what I also did in the immediate aftermath of the fund suspension. But we said, look, our investors expect us to be pursuing the strategy that we've been talking about for the last 2 years.
Mm-hmm.
That strategy can continue in a form, but we have to be invested in stocks that are exposed. So I can deliver what you want, Link, in terms of a much more liquid profile. But we've got to surely, in being straight with our investors, we've got to create that new, more liquid fund that's ultimately pursuing the same strategy, or at least broadly the same strategies we were pursuing before. And we sort of won that argument. So I was able to deliver what they needed in terms of liquidity profile of the portfolio, but at the same time make sure that the portfolio still had the same strategic focus that it had prior.
Okay. So then what happened?
Well, we obviously were in touch with Link every single day. In the immediate aftermath of the fund suspension, I went out and toured the country confronting investors in the portfolio. So I went all over the place and met lots of investors, and very strangely got a lot of support. These are mainly IFAs who were representing investors in the fund, and these were IFAs who'd advised investors. So I also went to see people like Hargreaves Lansdown and other people like that. But of course, I went out, exposed myself to, if you like, the potential criticism, and I got an amazing. I was astonished, really. I thought, given how the media, I would have been absolutely shredded. But most of the meetings were very good. In fact, all of them were very good. I had one or two dissenters in Glasgow. I had a meeting, I remember, in Glasgow, and we had some difficult questions in Glasgow, some sort of unpleasant stuff. But all of the meetings I had in general were extremely supportive. People understood the strategy. We communicated very clearly. They were supportive of what I was doing, and they said, right, well, we obviously prefer your fund wasn't suspended, but now that it is suspended, we're happy that we understand what's going on in the fund. We understand what you're doing, and we'll look forward to, when the fund comes out of suspension, continue to back your strategy. That was broadly the sort of message I got. So what happened next? Well, 4 months into the fund suspension, I had delivered the what I was asked to do from a liquidity. We hadn't completed the journey. We were we were about 4 months in. There was also a requirement to reduce the exposure to unlisted securities in the portfolio as well. So that was the other part. the sort of mandate was deliver this liquidity profile, but also you need to reduce and exit your unquoted positions. And we were working on delivering that. We were the start of that process, that second piece about delivering the exits from the unquoteds was started 2 months late. So we didn't actually start that until the end of July, roughly, I think. And wasn't our choice. We wanted to get going on it. In fact, we'd already started something along those lines prior to the fund suspension, but we were told to get going. But we weren't able to get that strategy going really until the end of July. Now, of course, as you know, August, the financial market shut down anyway. But our start on that part of the program was delayed. And the reason I mention that is we think ultimately this was an important part of what happened next. So I delivered the liquidity that they asked me to deliver. We were working on, but hadn't executed the sell down of the unquoteds. And then early in October, Craig called me on a Sunday and said, weirdly, okay, so on the Thursday and the Friday before, I'd had the best 2 days I'd ever had in the stock market with my fund on the 2 previous days. And the reason that happened was because Boris Johnson had won the Tory party leadership. He'd taken over. Theresa May had resigned. He won the vote to become the next leader of the Tory party. And all of a sudden, people were thinking, well, he can defeat Jeremy Corbyn in a general election. A general election will be called relatively soon. He's likely to win that election. Of course, he ultimately did. But suddenly, the stock market, having previously thought, "Oh my God, we're confronting a Jeremy Corbyn-led government in the UK," sort of an avowed Marxist, that's going to be a disaster for the UK. Suddenly, the market, oh no, hang on a second, the Tories can now win that election under Boris Johnson's leadership. That's going to be a much better outcome for the UK economy. There's less risk. Maybe he can even deliver Brexit and resolve all of that stuff that was going on in Parliament at the time. And the stock market rallied, but particularly it rallied in the domestic focus, the domestic part of the market, which is where the fund strategy had been focused.
Yeah.
So I had the best 2 days I'd ever had relative to the market and in absolute terms on the Thursday and Friday before the weekend when Craig called me on a Sunday and said, "We've been called to a meeting at Link on Monday. I don't really know what it's about. They haven't told us. It's scheduled as a regular update, but weirdly we've been called into their office in London in the city. Didn't know what it was about, but it was something like 4:00 on the Monday on after the weekend. So." But we were worried because we thought, well, why they call that meeting? If they need, it hadn't been programmed. It was a sort of special meeting. Please come in. We need to see. And what we found out in that meeting, which kicked off at about 4:00 in the afternoon on the Monday, was that they'd taken the decision to liquidate the portfolio and fire us as fund manager.
So I know what that means, but for the benefit of everybody else, what does it mean when somebody does that?
Well, we said at the time, it was about the worst possible thing you could imagine doing to the investors.
Why?
Because it crystallizes. First of all, it crystallizes losses. So at the point just when performance was turning around, Link took the decision to fire the fund manager, me, fire Woodford as a business, effectively fire the business. And from that moment, from 4:30 on, we were no longer the fund manager of the Woodford Equity Income Fund. And from that moment on, we had no revenue from the portfolio. So we had a best part of 100 people employed in the business. Our revenue ended at that moment, half an hour later. But not only that, what that meant was that Link then took the decision, we're going to become the fund manager of the portfolio effectively, and we are now going to liquidate the portfolio. Now, what liquidation does, of course, is crystallize all the loss, all the underperformance that the fund had endured in the previous period, just at the time when the strategy that I was pursuing had started to turn as a result of the changes that I've just talked about, the political changes, Boris Johnson leading the Tory party, the imminent election. Of course, that created a very...
How did that feel?
I nearly lost it in the meeting. I felt sick. I just thought all of us were... People talk about devastated. I was devastated about it. We were devastated. We were in that meeting, and it was all I could do to contain myself in that meeting. I was about as angry as I could possibly be without, letting go.
Why were you angry?
Well, we knew. Well, first of all, we said that is a disaster for our investors. It's a catastrophe for our investors. I mean, it's the worst possible thing you can do to the investor base. Who'd endured underperformance, who'd backed me as the fund manager. What that meant was that everything we'd said to our investors about what the strategy would deliver, why we were invested the way we were, what was the objective, if you like, all of that was pulled from us. So we weren't able to deliver to reward investors for the patience that they'd shown in me, our ability to deliver the better outcome that we wanted and we were going to deliver for our investors. That ability was taken away from us. So first of all, it crystallized losses for investors.
Yeah.
We had no idea how effectively they were going to be able to liquidate the portfolio. We imagined it would be a disaster. In other words, in rushing to cash, they would take poor prices. I mean, it was a bit like what we anticipated was a fire sale obviously the more liquid part of the portfolio was easy to sell. The more difficult part of the portfolio requires fund management skill. It requires knowledge. It requires all the things that we had, that we knew about those businesses. We knew where the markets for that stock was, and Link didn't. So, yeah, we knew it was going to be a disaster for our investors.
So you've got these people, because you've been around the country talking to them all. So you're getting to know these people personally.
Yeah.
Okay.
Yeah.
You're getting this support. This Link then pull the plug essentially and say you're now fired. All right, you've got these investors now that for sure Link aren't going to do a better job than you, and you've got the best part of what, $3 billion still?
Bit less than that then, but it's about $3 billion. Yeah.
Okay.
Yeah.
A huge amount of money from many thousands of investors.
Yep.
And now you have no way of recovering.
No way of recovery. No way. I'm not involved in the fund from that moment on.
You can't do anything. So then, I mean, I would be blowing a gasket at this point.
I did swear in the meeting.
What time did you leave the meeting?
I think it was late. I remember driving home. I think we were in there for about 3 hours, 3.5 hours. Part of the reason that it took so long is that as soon as they told us, we said, right, can you leave the meeting? We now need to write an email to the regulator to tell them right now that this is a disaster for our investors. This is the worst possible decision you can take for our investors. It must be stopped. You, the regulator, have to intervene here and stop this happening.
And is that what you did?
Yes. We sent an email straight away.
And what happened?
The regulator ignored us.
What do you mean they ignored you?
Well, they responded, but they said decision's taken. When it's Link's decision, we're not getting involved, pretty much.
Why? They're your regulator.
I don't know.
They're your regulator.
Yeah.
And more importantly, they're the client's regulator.
Yeah. Exactly. They said, from how I could...
Hold on. So everyone knows. You're talking about the Financial Conduct Authority. Is that who you're talking about?
Yes, I am. Yeah.
So the regulator, whose responsibility is to protect investors.
Yep.
Okay, that's the kind of like one of the most important things that they must do. They, when you reach out to them, respond to you with too late.
They basically said this Link's decision. They've decided to do what they've decided to do, and we're not.
What did they exactly say?
I didn't see their response, but pretty much, I mean, it was an email response, and they basically said, words to the effect, I can't remember exactly what they said. They basically said, we're not intervening. Link have taken the decision. You know, we're not getting involved, effectively. Now, we now know that they knew that was happening.
Okay.
But they were not interested in intervening or stopping it.
So Link had already been to the regulator
to tell them what they were going to do. Yeah.
Okay. So this was days or weeks ahead. Do you know?
I don't know the exact timing, but
there was a time the Link have gone to the regulator saying, this is what we're going to do. The regulator said, okay, fine. And that was what's happened. Am I clear on that? Or
yeah.
Not?
Yes.
So what do you do in a time like that? It's kind of like all of a sudden there's nothing you can do. You're helpless.
Yeah, we were helpless. We obviously we thought, well, what how can we react to this now? We have to appeal to the regulator. We have to make it very clear. We said in the meeting, this is Link, this is a disaster for our investors. This is the worst possible thing you can do to them. Please don't do this. Stop it now. There is a much better way. There are multiple different and better alternatives. This is the worst possible outcome. Please don't do this. They ignored us. They said the decision was taken. We then took some time to construct a letter, an email, which we sent to the regulator. The regulator responded and basically said, we're not getting involved. It's Link's decision. It's happening. Was the effect. So we then drove home. I was about as angry and frustrated as you can possibly imagine. Angry and frustrated because of all the harm that we knew was going to be inflicted on our investors. I knew then who was going to be blamed for that. I was the one who was going to get the blowback from that decision, not Link, not the regulator. It was all going to be focused on me. There was no way back for us to change the decision. There was no possible way that we could repair the underperformance that I was responsible for, obviously initially, but there was nowhere we could repair that because we'd been fired. I'd been fired as the fund manager, and from that moment on, we knew the business was no longer viable. Of course, so I had to then go back to the business the following day, first thing in the morning, and tell everybody that they'd lost their jobs in the business. It was a pretty challenging time.
Fuck.
Yeah. Yeah. Yep.
Wow.
Fucking horrendous. And by the way, on the following morning, when I arrived at the office, knowing that I was going to have to fire best part of 100 people, I was doorstepped by Panorama as I arrived at the office, who stuck a microphone and camera in my face and started asking me some ridiculous questions.
Tell me about. I get the anger, but I mean, you've been under a huge amount of pressure now for a sustained period of time. I would argue that wouldn't be allowed today, to put someone through that much torment for that period of time. How do you keep it together? How do you not lose it?
There have been some very dark days, I think. Very dark. Had a massive impact on the investors, first and foremost, of course. And that played out in the media. It played out in, I was accosted in the street umpteen times by people. You're that bloke who did X, Y, and Z. Of course, it had a massive impact on the people in the business who'd been on the journey with us, who'd worked so hard on building the new after the suspension decision, I think the whole business went into overdrive. We were working ridiculously long hours to deliver the outcome that we were required to deliver, and we'd done that. All of that went up in smoke. How I coped, I don't know. I mean, there were some very, very dark days, and I think in a way, the fact that there were other people on the journey with me, who were going through that difficult time with me, sort of helped me through that journey. But there were some very lonely, very dark moments, and of course, it had massive impact on my family, massive impact on me, my mental health, and as you can imagine, it was horrendous.
I'm angry with Link in my interpretation right now.
Mm-hmm.
I'm angry with them because have the investors gone and pursued Link?
There were a couple of legal actions taken against Link, but and they were proceeding through a very tortured legal process. But in the end, those investors pursuing that action were confronted with a choice. Either you accept the sort of the FCA engineered settlement, where FCA ended up finding Link, requesting Link to pay compensation to the fund, 230 odd million to the fund investors. So the Hobson's choice they had was, you either get what this compensation payment, or you carry on pursuing them in court. And there was, I think, a vote, and the vote was, we'll take the compensation payment.
What were people left with? How much in the pound did they get?
I don't know that number. The 230 million was some compensation, but that was the FCA's assessment of the harm that was done to investors as a result of the mistakes that they adjudicated were made. But the real damage to investors was done in the fire sale of the assets, the less liquid assets in the portfolio. The timing and the way that those funds, those sales were executed, based on the information that we have, we think that they were executed very badly.
So if I'd give me some numbers here. So if I'd have invested £100,000 on the day you went on your own and set your business up, I'm backing Neil. Yeah, great result, great track record. He's the man. I put 100,000 in. What would I have got back
at the end of the process?
Yeah.
So after all the money, and there is still some money to be paid out to investors. So there are some remaining illiquid.
How much?
It's hard to know. We don't have that information, unfortunately, but we know that there are holdings that haven't been liquidated yet, for more than 5 years on from the fund suspension. But we're aware that there are some small holdings that have not been liquidated.
Okay. Well, I'll go, whoa, that's scary. I've lost more money at the bookmakers. Right, okay, so and then tell me what the difference would have been if I'd have taken the value at the suspension and then the liquidation. So if I had 100 there, what would that be?
So from the fund suspension to all the cash, excluding what remains, that's about 77 or 78p in the pound.
So you're talking about 23% loss?
Yes.
Okay. No one likes to lose money.
No.
Let's be very clear about that.
No.
Okay. But most people every single month spend money they don't even think they're spending on subconscious spend, tapping their phone, which has got their credit card in nowadays. Everybody wants to get involved in crypto and get rich quick. And so they're busy, thinking they're investment gurus when it's going up, like they all are right now. Okay. But not when it's going down. Can you just tell me, I mean, I'm a financial advisor by trade, but can you tell me, okay, as a fund manager who understands the investment world, if I invest in any stock on the FTSE 100 the S&P, the NASDAQ, the DAX, the CAC Quarante, the Hang Seng, the STI, the AEX, the Bovespa, the Bovespa, if I invest on any blue chip stock on any freely tradable stock exchange in the world, are any of the returns guaranteed?
No, they're not.
Is there any chance I might, just might, lose some money?
Yes, there is.
Are there warnings on every single advert and commercial that exists on the planet for investing saying past performance is not necessarily a guide to future performance? Okay, this investment carries risk.
Yes, there are those warnings.
Okay, if I'd had 100 at the time of suspension, what I would have got back would be 23%-ish less.
Mm-hmm.
This is hardly the end of the world. You and I both know that there are stocks that have performed way worse than that. We know that there are funds that have performed way worse than that.
Mm-hmm.
Whether they be hedge funds, whether they be index funds, it doesn't matter. There are funds that have performed way worse than that. Why? You.
It's a good question. The whole thing created its own momentum. The story created its own momentum. The media never really had to quantify, well, Woodford's underperformed by this relative to, maybe what he'd done in the past, or Woodford's, investors have had this outcome relative to other outcomes. There've been other very, very high profile retail funds. One particularly comes to mind, which is the Bailey Gifford fund, which at one stage was down over 60% from peak to recent trough.
Yeah, but this is being painted like a whole Bernie Madoff thing.
Yes.
But it's not.
No, it isn't. No.
Bernie Madoff had a Ponzi scheme running for decades.
Mm-hmm.
Okay? This is not. This is you running an investment fund that went down in value because of poor performance over a period of time that you were trying to fix, that the control was taken out of your hands.
Mm-hmm.
Okay, of which you were then forced away from being able to do anything to fix the things that you got wrong. If anyone in their life has made a mistake and got something wrong and they've not been given a chance to fix it, they would know how frustrating that feels.
Mm-hmm.
Regardless of the subject. Why do people feel it's right to attack you?
I think I'm the sort of useful idiot, and maybe, I'm the useful idiot that the story created its own narrative, really, so the truth was a casualty. People talk about this in the context of story about war or other high profile media stories, but the truth was a very early casualty. And then, of course, what made it more difficult and what helped the media's narrative to demonize me, of course, was that the FCA announced that they were investigating me in the immediate aftermath of the fund suspension, which is very, very unusual. It's very unusual for the FCA to announce that they're investigating somebody. But they announced, because it was so high profile, and because I think they thought that it would protect, if you like, the FCA's reputation if they were able to sort of deflect some of the concerns that investors in the media had about what their role had been in this. They announced, we're investigating Neil Woodford.
The people that work for the FCA are human beings.
Mm-hmm.
I'm pretty sure they've made their fair share of mistakes over the years as well.
Yep.
Who has the right to be high and mighty on this? Regulators have proven time and time again in different parts of the world over the years, have proven to be, in some cases, incompetent. When that happens, when they get it wrong, they apologize and they work hard to fix their mistake. That's the world I live in. You've been here in my studio, filming this podcast with me, telling this story from your point of view for the first time in 5 years since this happened.
Mhm.
And most of the investors are probably still none the wiser because they've read the narrative that's taken place and they don't know the truth.
No, they don't. No, the truth is very different from the story that was told by the media.
In 2012, I nearly jumped off a building and killed myself because of the media, okay, and what other people said about me, okay? I literally went to a building in Chelmsford. I flew back to London to say goodbye to my children to jump off a building in Chelmsford, all right, in Essex. I planned it, I organised it, and thank goodness my dad was there at my house to save me from doing something stupid. That in my life, okay, was the scariest moment in my life. Does anybody have any compassion and empathy for what you might have been through over the last 5 years while you've been subjected to all this kind of treatment? You're a fucking human being, for Christ's sake.
Yeah, I think people who, strangely, more recently, as I've launched the Woodford Views blog and we've had some interaction, I've hidden away for a long time. I mean,
I get it.
the FCA investigation's still ongoing, 5.5 years on. And I've,
Have you done anything wrong? Is there anything in this conversation today with me over the last couple of hours of us talking? Have you done anything wrong? Is there something you're not telling me that you've done wrong that you shouldn't have done, okay, that is going to come out in the wash over the course of the next 2 or 3 years? It's going to be like, oh, hey ho, sorry chaps, I didn't let you know that bit, or not?
No. This is the truth. I've told you the truth of what's happened. So, yeah, I mean, there's a lot more I could tell you, or I would like to tell you, that I can't tell you because it's, I'm in the middle of an investigation, or I hope towards the end of an investigation. But yeah, there's a lot more to it. But no, I don't think we did anything wrong. I underperformed as a fund manager. I've made that clear. I look back and think of that as a mistake. My strategy didn't work. There were things about my investment calls at the time which were not.
Financial Times would be 1,000 pages thick if it was reporting on the underperformance of all underperforming fund managers.
Yep.
I was bullied at school, and I don't like people being kicked when they're down.
No.
I don't think it's right. And I don't think the press have a right to fabricate stories just to sell newspapers and be allowed to get away with it. And I certainly don't think regulators have a right, okay, to behave in a way that is not in the best interest of everyone involved. Your case that's on with the regulators right now with the FCA, what are you trying to do?
I think, well, the FCA have made they've asserted various things in public now about what I did or didn't do. And they have accused me of acting without due skill, care, and diligence, I think the phrase is. And I particularly, I'm not the only person, because of course there is a case against the business as well. So there's action being taken against me, Neil Woodford, but there's also, I'm the only person that's been investigated post the Woodford events. So nobody at Link, for example, has been investigated. I'm the only person, but also Woodford, the business. There's an action against Woodford as well. So
From FCA?
From the FCA, yeah.
Which is what?
The business didn't act with due skill, care, and diligence as well.
Okay, so am I missing something here? You underperformed.
Mm-hmm.
You underperformed because you didn't take due skill, care, and diligence?
The underperformance is not what they're saying I did. They're saying that I failed to do things that may have led to the fund suspension decision.
What?
It's quite arcane. The case that they have highlighted, or the case that they brought against me, but it's essentially that they're saying I had a narrow, inappropriately narrow understanding of my responsibilities, that I should have challenged the liquidity framework that I was subjected to by Link. So Link is the authorized corporate director, but it bears regulatory responsibility for the control environment that Woodford was subjected to and the fund was subjected to. And effectively, they're saying, I, Neil Woodford, the fund manager at the end of a sort of chain of command, should have realized effectively that the liquidity framework that Link were imposing on Woodford and on the fund was inappropriate. I should have known that it was inappropriate, and I should have challenged it. And they've made some other some assertions about things, but fundamentally, that's the core thing that they're saying.
What do you want people to know?
The truth.
And if they were all here on a live stream with us right now, what if you could turn back the clock 5 years and control the narrative, and be in charge of the outcome, what would you want to happen?
Well, I've looked back and thought, what could I have done differently to have changed the sort of catalogue of things that happened? Was there any intervention? Could I have intervened at any stage to have changed what happened and what ended up with the fund suspension and the fund liquidation? And I don't think there's anything I could have done to have changed that. I was not in control of anything. That's the frustration, really. I ran the fund. I delivered the underperformance. I was responsible for the underperformance. But from the moment of fund suspension, didn't really control anything. And there's nothing I could do to stop that train that was being driven by Link, and to some extent by the regulator.
There'll be people that say you made a fortune out of that business and made a load of money managing funds and made a load of income from that. Okay, there'll be people that say that. There'll be people that will never be happy with other people making money. Okay, that's just life. Did you make a lot of money?
Initially, yeah, but we.
Does a fund manager make money where the fund underperforms?
They get a basic salary, but typically they don't get paid bonus. And normally, or their remuneration should, in my view, be linked to the investment performance they deliver. So initially, when things were going well, I was paid well as a business. I wasn't paid by the business. I was a shareholder in the business. So effectively, the owners of the business received dividend income from the business. So if the business did well, we got paid because there was money in the pot, if you like, after we'd paid all of our bills, paid our salaries, paid all the things that we needed to pay for. If there was money over at the end of that process, the company was able to pay a dividend to its owners, and I was one of the owners, the majority owner of the business. So that's how I was I achieved return from the business and its fund management contract that it had on a number of different funds. But when the shit hit the fan, Craig Newman and I, who effectively were the shareholder, we said, right, well, we won't receive any more remuneration. So in May, the last time I got paid was in May 2019. It's quite a long time ago.
You've never been paid since?
No.
Not a little sneaky bit out the side?
No.
Nothing? How do you feel right now?
Well, I've had 5.5 years to sort of acclimatise to what happened. But one thing that hasn't, I have a sense of frustration, I think, but as time has gone on, I've become more and more angry about what happened, because it was so unjust, it was so unfair, and it was so damaging, unnecessarily damaging to everybody. Damaged investors, it damaged the industry, it damaged my business, it damaged the employees, and ultimately it wreaked havoc on the lives of the people who were all invested, if you like, in the future of Woodford Investment Management, which wasn't just me. It was It was the team, the very close-knit, brilliant team of people who made that business what it was.
I keep having these little flashbacks of what you said to me today and different bits that I pick up upon, and I just try and imagine myself in that place, and the thought of, in the space of a few hours, not being able to control the outcome for the investors, and then having to wake up the following morning and tell all of their staff you're going to make them redundant because the business can't continue. I think about those two things, and if anyone's had to do the redundancy stuff with people, they will all tell you how horrific it is and so deeply sad and disappointing to do it, even if it's not their company. But to have both, I mean, getting up out of bed that next morning and realizing what you're going to have to do, and obviously wanting to be transparent and honest and face everybody. I mean, I don't know someone that has gone through that. And I because I'm from this world,
Mhm.
I think I kind of feel it a little bit more, because there's been times that I've dealt with investors over the years when things haven't gone well, and I've had to sit and deal with that situation and try and rectify things for them and work forward. But then to wake up the next day and have to fire my whole team,
Mm.
I mean, goodness.
It was the hardest thing I've ever had to do. I mean, we all, people of my age have had to deal with, tragedy affects most people's lives. It's very rare to come across a family or somebody who's not had a very difficult moment in their life. I've had my fair share, and dealing with the loss of my parents, and that sort of thing is very sad. But I think the hardest thing I've ever had to do was go in that following morning after the liquidation decision, go in and talk to my team and tell them it's over. All that hard work, all that emotion, all that sort of intellectual effort, all that commitment that they'd shown, was really for nothing. That was the end. That was the hardest. I mean, I broke down. I was in tears.
Yeah, I would expect you to be.
Yeah, it was hard. So,
This is, I think this is due.
sorry, mate.
No worries. Take a break.
Sort of, you can keep it together for a while. Brings you all back. That's why I'm angry. It didn't need to happen.
I think people need to know this.
Hmm.
I think people need to know this. Because I think a man who's got the talent, the brilliance, clearly the code of ethics that you have and the integrity that you have, you shouldn't be final years of.
It's been very unfair. Yeah. Yeah, particularly the investigation part is we every year that's gone on, every single aspect of this investigation has forced us to sort of re-examine in minute detail. It's been incredibly painful. Imagine, it's the worst event in your life, and you just have to replay it every few months or every few weeks. You've got to revisit it, revisit everything that you did. investigate every single piece of material that was ever, every email, every interaction, every recorded conversation. Everything has been minutely sort of examined. And we've had to do that. We've had to go through thousands and thousands and thousands of pages of evidence. And it's like rubbing salt in a very open wound every single time you do it. And you have to revisit it because you have to just make sure, what did we do? Was there anything we did wrong? This is what the FCA is asserting. Okay, let's go back and let's be very, very clear about what we did, what we didn't do. And that process has been incredibly painful. But the process has convinced us, the team that are working with us, that we didn't do anything wrong. We don't think we did anything wrong. In fact, we think we went above and beyond to. It may sound extraordinary to people who are listening to this. They may, I think, Christ, didn't it? Everybody makes mistakes. I mean, I'm not saying we didn't make mistakes. Our transparency was a mistake. I think that was a mistake, and I would redo that. Clearly, the mistake of allowing another organization to control our destiny in the way that they did was a mistake. But when we re-examine every single thing we did, we just don't think we did anything wrong. And we've been over it in minute detail. We've been at this for 5.5 years. And it will go on.
How much longer do you think it will go on for?
Well, I'm not in control of that. There's at least probably another, maybe a year to go for the next phase to play out. And then it could go on for another maybe two years after that.
Are you allowed to be a fund manager in the UK?
I think the FCA would make it very difficult for me to do that if I wanted to do that.
So if you were a fund manager and that was your career, and you're now not allowed to be a fund manager, what do you do?
Well, it's been very frustrating, because that's what I want to do. I think it's what I think I'm able to do. I think I have the skills and talent and to do that. But it's been very frustrating because I've not really been allowed to do it. And we anticipate that the FCA would make that very difficult for me. So you try and find another path. You try and take stock of your skill set and apply it to different things. And, I've thought about doing other things. But my heart really is set on, at some stage, becoming a fund manager again. I think, Warren Buffett's doing it, and I think he's 94 or 96. He's as good as he's ever been. I'm not saying I will be fortunate enough or would want to go on that long, but this is an industry where I think knowledge and experience are actually positives, and I think I have a lot of that. And obviously we learn more from mistakes than we do from wins. So, I think having been through what I've been through, I think the one thing, every cloud, they say, has a silver lining. Some of the silver lining of the very difficult period I've been through recently is that it's taught me, I've learned a lot from this process. So I think those learnings would help me become a better fund manager in the future.
Okay, well, let's put you on the spot a little bit. Let's do a little bit of testing here. Okay, we see some changes going on in the economy around the world, some political decisions that were made recently. I'd love to get your insights on what's happening here on the UAE and the economy here, and I'd love to get some insights on how this interpretation of the Trump-Musk broship is going. So obviously we saw the election, Trump's coming.
Yeah.
What does that mean for the economy?
First and foremost, for the US economy, I think inevitably the growth is going to be stronger. Certainly in the short term. So Trump's first and foremost, Trump's cost-cutting agenda. Trump's tax cutting agenda will be stimulative for growth. So all other things being equal, growth will be stronger because lower taxes will deliver higher growth. I also think his desire to deregulate, and the fact that he's appointed somebody as talented and as intelligent as Elon Musk to deliver that part of his agenda tells me that they're serious about it. And I'm a big believer that a deregulated economy will, all other things being equal, outperform an overly regulated economy. Regulation, I mean, when I look back and try and understand why the US has grown more strongly, for example, than Europe or the UK over certainly post-COVID, the reason I think is very clear, that really regulation it's a more lightly regulated economy than Europe or the UK, and that has enabled the economy to grow more strongly. So I think that those two things are very positive for growth. I'm not as concerned as the market appears to be about inflation. There are some inflationary consequences of the tariff agenda that he's talked about. That will make goods more expensive, and consumers will end up paying more for things than they might otherwise have done so. But of course, there will be alternatives, and the objective of that policy is clearly to persuade US consumers to buy domestically produced goods, and to make domestic industry more competitive. Now, that traditionally is not good for growth, and it's traditionally inflationary. I'm less concerned about the inflationary consequences because I think, first and foremost, Trump's agenda will deliver lower energy prices globally. So I think that will mitigate for the potential inflationary consequences of his tariff agenda. Really, the challenges may be, perhaps the most interesting consequences of Trump's election will be for Europe and China, perhaps, particularly. Now, we'll hear more about how China is going to react to Trump's agenda when the Trump agenda is more clear, particularly on tariffs. And so the Chinese authorities have held back their announcement on what sort of fiscal stimulation they will do until they know what tariffs are going to be applied to Chinese exports. But in thinking that China's the only economy in the world to be affected by Trump's tariff agenda, that would be a mistake. I mean, the UK, for example, has a £72 billion trade surplus with the US. It's the biggest trade surplus that the UK economy enjoys with any trading partner. Interestingly, $4 billion of that 72 is in goods, 68 billion is in services. So to some extent, there's some insulation because it's harder to levy tariffs on services than it is on goods. But nevertheless, the UK has a vested interest in making sure that it's able to do some sort of trade deal with the US. And of course, it's important for Europe. Europe exports a lot of stuff to North America, and it's very important for the European economy, where growth is struggling. It's very important that the impact of those tariff measures will be very important on Europe as well.
And briefly, what do you make of Dubai and the UAE and the government and the way this place is run? And it's boomed over the last 20 years. I came here in 2005, January, and most of what you see didn't exist. How did, from an economic point of view, how do you interpret it?
Well, I didn't know much about the UAE or the region until, I would say, last 3 or 4 years. And I've been here quite a lot over that period of time. Have enjoyed more. The more I've come, the more I've enjoyed coming here. And you just cannot not be impressed by what's been achieved in such a short space of time. It's funny. I reckon you sort of you get an insight when you come to this country, and you see what's been achieved in a very short space. You can understand that pioneering sort of land of opportunity thing that persuaded so many Europeans to go to North America in the 19th century. And in a way, you can understand that sort of vitality and can-do attitude that you see here. And what's so interesting is that there is a sort of first of all, what I think differentiates this economy and this government and this sort of environment from, say, the environment at home back in the UK is whenever we think about a new initiative in the UK. You know, we need to generate more growth. I mean, the new government has talked about its growth agenda. And you see the measures that are taken to engineer that. I can almost guarantee that there will be no positive growth outcome from what the government has done. But you come here and you can see there's a plan, and the government is very determined to deliver that outcome, and it is able to do it. And you can see the tangible signs of not just the growth agenda being delivered, but also the measures to diversify the economy away from its dependence on oil and gas. All of that is incredibly exciting. So when it's like a sort of a boost of adrenaline. You come here and you think, oh my God, this economy is achieving so many things. It's achieved already a huge amount, but there's so much more to come, I think. So it's the land of opportunity, really.
For sure. For now, I think we'll leave it there. But Neil, I really appreciate your time. I really appreciate your real honesty today and sharing this with us. And I hope that only great things happen to you moving forward.
Thank you very much. Thank you.